Thank God it's Monday, and welcome to Business Incorporated live from Channels Television. Here's what's coming right up on the program. Bank of America sees Nigeria's central bank raising interest rates by 700 basis points as inflation surges. And Botswana extends diamond sales agreement with De Beers until 2033. Morocco to increase imports of wheat and barley. It's good to have you join us again on the program. I'm Will Ibang. Let's get right to business. And we're heading straight to the markets, kicking off with equities in Africa, where they were trading, major equities were trading with a bit of, positive sentiments at intraday. We saw the Nigeria's NGX up 0.81%, strongly in green territory there. Now at the 61,000 level. That's a huge one, breaking a record high there. Now South Africa is up 0.1%. Now look at Egypt, which is still closed since last Wednesday, but was trading in positive territory, 2.18%. Now Kenya traded down in Friday's trading session. Now let's roll over to the Middle East now, seeing how mixed sentiments are persisting in intraday activities there. We see the Abu Dhabi index down 0.05%. Dubai, however, is almost 2% up at intraday. Now on the flip side, we see Saudi and the Qatari index is trading in opposite directions. So Saudi's index was up 0.19%. while the Qatari index was down 0.22%. Now, U.S. tech giant Apple has filed a lawsuit in Switzerland trying to trademark the picture of an apple. Lars Alter is with Deutsche Welle and joins me from Berlin. Lars, the apple is a fruit, but it's also been the company's logo for decades. What's behind the lawsuit?
Yes, thanks for having me. The funny thing here is that Apple is not actually trying to trademark the Apple that we've known for decades to be the company's logo. That would, of course, be the famous stylized Apple with a bite taken out. That logo is probably one of the most famous in the world and also one of the most valuable. A recent survey by Interbrand values Apple as a brand at $482 billion for last year. And that's really just the worth they put on the brand itself, with its name, the logo, the perception, making it the most valuable brand globally. Anyway, as I said, Apple is not actually trying to copyright that logo, but a black and white picture of an actual apple, as in the fruit. It's actually a rather unremarkable picture. It looks just like any other apple you've ever seen. And that is, of course, where the problem lies, because critics are saying you cannot trademark a fruit. You didn't invent it or design it. It's just there and it belongs to everybody. Among those who are very concerned is the Association of Swiss Fruit Growers. They are using an apple in their own logo, and no, you would not easily mistake that one for the iPhone logo. The group is worried that they might have to change their own logo if Apple were to win the case.
So why is Apple actually doing this?
Well, it seems that Apple is trying really hard to be the only one in town, the only company to have an apple as a logo. They have started similar lawsuits before, not only eyeing pictures of apples, but also the word itself. Remember the fight with Apple Corps, which was, of course, the record company for the Beatles. They were obviously quite a bit older than the company from California, and they had to deal with a lawsuit over rights to the name for many years. After years, there was a deal. Eventually, the Beatles company said they would stay out of the computer business and the high-tech Apple would stay out of the music business. But that, of course, only worked until Apple started iTunes and later called it Apple Music. So there's quite some legal history behind this. More recently, Apple lost a lawsuit against jazz trumpet player Charles Bertini, who has also used Apple Jazz as his own label for years. And he actually won the lawsuit and he continues to use that name. But we see Apple is quite a name. Everyone wants to have it. Funny, if you remember how the company actually got that name. According to legend, found founder Steve Jobs was so frustrated when his staff failed to come up with a good name for the company that at some point he said, if you can't come up with a better name, we will just call it Apple. And that was it.
That's pretty funny. And what's happening next? And how is the business world looking at this?
Well, right now the case is before Switzerland's highest court. Both sides have made their final statements and now we're waiting. Most experts actually think that Apple won't win this case. They go back to that argument that no one can just trademark a fruit. However, any company with any products related to an actual apple will watch this very closely because they know that Apple likes to protect its interest in very wide-reaching ways. And even though the company from California is not winning all of these cases, as I just said, just bringing a case against someone could be a massive problem for a company. The time, of course, and the effort it takes to fight a lawsuit, the legal bills, and especially fighting one of the most powerful companies in the world in court is definitely not what anyone wants to deal with.
Thanks so much, Lars Alter from Deutsche Welle. Now we move over to the UK, where we're seeing UK rail passengers facing travel. They're to face travel disruptions as the train drivers begin their overtime work ban today. Juliana is in London with the details on this latest development. Juliana, good afternoon. Rail passengers have been warned of 6 days of disruption as just train drivers refuse to work overtime, with the transport union boss vowing to strike for 20 years if necessary until resolution is reached. What is the current situation on the negotiation table, Juliana?
Good afternoon, Will. You're absolutely right. Travel disruption for Brits continues, and it actually continues at a really difficult time because Wimbledon, which is the world's probably most competitive tennis tournament, kicks off today. Tens of thousands of people are supposed to be travelling down to South London, but of course their plans have been disrupted by union bosses who still, after months of internal negotiations, are conducting industrial action over pay, jobs and conditions. This week's disruptions are being coordinated by the ASLEF union, which basically is a large union that looks after the interests of train drivers. Again, they are not happy at what has been put on the table by the British government. And this week, they are refusing to do any overtime. Now, this is going to affect, I believe, about 16 of the country's 35 rail operators. The British government are today asking anybody with travel plans to make sure they check with the travel operator before they travel. We are already hearing about distressing stories from holidaymakers who are supposed to be flying out of Gatwick today because all of Gatwick Express services have been cancelled. And again, you know, this is part of a long-running issue that the Prime Minister Rishi Sunak has to deal with union bosses here in this country. We know that the winter of discontent may have indeed ended, but lots of the issues affecting employers and bosses, union bosses looking after employers, does continue. So this week, it's rail passengers that have been significantly impacted. But in the weeks to come, union bosses looking after NHS staff, looking after staff that work at the British Museum, looking after staff at pretty much all sectors, will be downing tools at some time during the summer. So the winter of discontent certainly is ongoing in Britain at the moment.
We do hope this lets up soon, Juliana, because a lot of strike day, and we're just wondering when is the next strike. Now, we're seeing the British competition regulator is also warning motorists. The motorists are paying higher prices for petrol and diesel due to a decline in competition in the sector. I'm wondering, is this a lack of competition, or is it a result of is it as a result of the global oil supply cuts?
Well, I think you're absolutely right on one part there, Will. This is a huge story that it didn't start in the UK, but it seems to be impacting the UK more than anyone else. And of course, the genesis of this was Russia's illegal invasion of Ukraine, which of course rocked global energy supplies. It's since weaned out, and I think that's why the Competition and Markets Authority have intervened this week following a meeting last week with the Chancellor of the Exchequer, Jeremy Hunt, because at the beginning of the year, one of the 5 promises that the Prime Minister made to beleaguered Brits was that his government would be halving inflation before the end of the year. We're 6 months in and inflation is still staggeringly high. We're not seeing some of the prices that we were seeing at the beginning of January, but certainly 8.7% is still a major issue for Brits who are struggling to pay their bills at the moment. This time last week, supermarket bosses were hauled into the Business Select Committee, which is made up of a of parties.
Hi, Juliana. Can you hear me, Juliana?
The Palace of Westminster, and they were being probed about their prices, asking whether or not they were doing their best to make sure some of the cuts that they're seeing at the top and at warehouse.
I think we're having some technical issues with Juliana there. Thank you so much, Juliana, for that update. We'll look forward to developing stories. We do know that the government has had an eye for the retail sector in the UK for some time now, since last week, and we'll see how that unfolds. Now move on to Asia, where Asia-Pacific markets rose as investors digested a slew of manufacturing activity reports that showed slowing output in the region. China's Caixin Manufacturing Purchasing Managers Index for June came in at 50.5, slightly higher than expectations of 50.2. Hong Kong's Hang Seng Index rose 2.2% in Tuesday's afternoon session, leading gains in the region, and the Hang Seng Tech Index jumped nearly 4%. Now look at mainland China. We also see in Japan, Nikkei 225 is up 1.7%. The Kospi in South Korea is up 0.49%. The Hang Seng Tech Index, I did mention, is up 2.06%. Strong performance from Asia markets, leading gains, and probably because of, a lot, we did see Apple, surpassing the $3 trillion mark, and that really drove the markets. Now we move on to global other markets. In the U.S., we see the stock futures were little changed on Monday as traders prepared for the second half of what's already been a stellar year on Wall Street. Futures tied to the Dow Jones Industrial Average dipped 0.14%, while the S&P 500 and NASDAQ 100 futures traded up 0.04% and 0.17% each. Stocks are coming off a banner start to 2023. On Friday, the NASDAQ Composite closed out its biggest half-year gain since 1983, surging 31.7%, while the S&P 500 jumped 15.9% for its best first half since 2019. Now, the Dow Jones Industrial Average lagged, climbing a modest 3.8% during the period. And these gains are coming as enthusiasm around artificial intelligence boosted tech stocks. I did mention Apple. Now, recent data showing a resilient U.S. economy despite higher rates also lifted investor sentiment, easing some of the fears on Wall Street of a long-awaited downturn. Now, stocks are kicking off a shortened trading week on Monday, with the market closing at 1 p.m. today. That's Eastern time for the Independence Day holiday. Investors will pore over the latest ISM Manufacturing PMI and S&P Global Manufacturing PMI data for June later today, ahead of Friday's keynote jobs report. Now, oil prices slipped in early Asian trade on Monday as global macroeconomic headwinds and possible further interest rate hikes from the U.S. Federal Reserve's upset forecast of tighter supplies amid OPEC Plus cuts. Brent crude futures dropped 20 cents to $75.21 a barrel after settling up 0.8% on Friday. The U.S. West Texas Intermediate crude was at $70.41 a barrel, down 23 cents after closing 1.1% higher in the previous session. Now, Brent fell for the fourth straight quarter by the end of June, while WTI notched a second quarterly drop as the world's top two economies, the U.S. and China, lost speed in the second quarter. Economists and analysts have lowered their Brent price forecast to an average at $83.03 a barrel in 2023 in the June poll that was conducted. Now, analysts also expect to continue to see upside from current levels as the market is expected to move into deficit in the second half of 2023. Investors are looking ahead to a conference later this week hosted by the OPEC for supply queues. Now we'll take a break now. When we come back, we'll look at AI buzz in Africa and how it's affecting the financial sector. That conversation in a moment. Do stay with us. This is Business Incorporated. Welcome back. Now, the financial services sector in Africa is undergoing a transformative wave driven by the growing adoption of artificial intelligence, AI technologies. Now, according to recent reports, AI investments in Africa's financial industry are projected to reach $5.5 billion by 2025, now showcasing the significant impact of this emerging trend. Benjamin Dada, fintech expert and consultant, joins me virtually from the UK to talk about this. Now, Benjamin, it's good to have you on the program. Benjamin, what kind of disruption should we expect following this projection?
Absolutely. And I think, even your numbers for, the 5.5 billion, if we decide to blow it open, we see a deeper picture. So, for instance, in just the first quarter of this year, the funding in that global AI space is 5.4 billion, which is already matching what the whole of Africa, is projected to do in 2025. So the kind of disruptions I'm expecting to see are things around like business process and operating model restructuring. So what that means is that, businesses will begin to look at their departments and their functions, and they'll be figuring out how can AI either augment some of the capabilities that we have. Take, for instance, customer success, right? Before now, it was very manual. Then we moved to robotic process automation. But now with the advent of, chatbots, and businesses can leverage ChatGPT. So we expect customer success to be more seamless and more effective in that area. But what this means then is that there will be some jobs that will be displaced, but then it means that some new type of jobs will be created. And I think this has always been the debate about whether AI can create jobs as fast as it will take away some jobs. But overall, it's always a net positive when we find a way to leverage technology and make it work. The final thing I would say is that, with the disruption that we're expecting in the AI space, we can expect more focus and tilt towards AI as an industry in Africa, right? So if you look back a few years, there was payments, the payments industry was growing as fast as possible with startups. And then last year, we had crypto and Web3 startups spring up in Africa. We are seeing a similar trend with AI startups. So if you look at the first half of 2022, crypto startups raised about $121 million in Africa. And in the first half of 2022, we also had AI startups raise $112 million. So we're seeing a similar trajectory for more startups going into the AI space to build businesses in Africa. So those are the three major things I wanted to highlight today, that there'll be general business model restructuring and operating model restructuring. There'll be some job displacement and job reorganization. And then there'll be more focus and tilt by startups and thinkers in the AI space, particularly as it relates to Africa.
We don't particularly like the job disruption or job displacement part of that disruption, but you mentioned some areas. I just want you to go a bit more specific now to what areas are we seeing users of AI in Africa? What areas have been impacted by this new AI buzz?
Absolutely. And I think what's even more interesting is that beyond even comparing the trend by industry, I wanted to also paint a picture around how AI has actually been operating in Africa for about a decade, right? InstaDeep, a Tunisian startup, was recently acquired by biotech, and they were founded in 2014, right? Smile Identity, founded in 2017. And, these players have been existing for a long time in Africa, but just the same way COVID accelerated remote working and all of that, we're seeing that generative AI has sort of accelerated the move and the focus on AI in the workplace. So some of the areas we've seen AI play, and we will continue to see AI play, is around identity and onboarding. So with identity and onboarding, you can now do things like, smart selfie, face matching APIs. You can do things around even optical character recognition. So you can get someone to feed in their bank statements, and then you can use AI to extract the data from there and make sense of that data. Another aspect that we're seeing AI disruption is fraud detection and transaction monitoring. And this goes beyond just the rule-based engines that people are used to, but it goes more towards intelligence, right? So how do you do things like behavioral biometrics, which means that by just pausing and wasting time before you enter some particular information, that serves as a data point for an AI algorithm to figure out whether you are the maybe original owner of the account or you are an authorized user. So fraud detection, transaction monitoring, being able to generate like a risk-based score per transaction is an area in which we're seeing AI being deployed. And like I hinted to, credit risk assessment and coming up with more accurate credit scores, those are some of the areas in which we're seeing AI. Because before now, many of these things were either manual or suboptimal. But with AI and intelligence, beyond just having data and analyzing it, the data can learn from itself. So the more you do these things on your data set and the more you run your algorithms on your data set, the better it becomes over time. This wasn't possible before AI.
Yeah. So you just raised some concerns here, and you mentioned fraud, privacy, credit risk assessment, credit scoring. I do know these are concerns that, institutions will be worried about, or individuals will be worried about. What regulatory changes or policies should we expect with regards to this?
Yeah, that's another great question. I think regulators so far have tried in a way, because when you look at AI, it picks from a bunch of other industries. So there are things around cybersecurity, right? There are things around KYC. We talked about onboarding and identity. So yes, we would see that, more businesses are going to look into, the aspects of their AI usage that already has pre-existing regulations. So things around even data privacy. In Nigeria, we have NDPR. Data bill was recently signed as well. So yes, businesses will continue to look into, what am I doing today that already has an existing regulation. But then for the regulator to stay ahead, especially in Africa, they need to be the ones driving some of these conversations. So in the UK where I'm based, they've spent about 110 million just to create something called like a tech mission fund, right? So that way, the regulator stays at the epicenter and attracts all the innovation to itself. In fact, it invests in prototyping and allowing people to experiment with how AI can, even deliver government value or deliver public service value, or even in private sectors, right? So by creating like tech funds and by orchestrating those kind of AI conversations, the regulator will stay on top of this. And then the final thing is like, now they need to review again all of the existing regulations that they have put forward in that point one. So you look at your cybersecurity regulation, even open banking regulation, because AI in itself is not just like a standalone. It's always a part of like a technology stack, right?
Okay,
so maybe the way I'm getting data now is not just by uploading bank statements, is by connecting to a user's account directly and pulling that data. So essentially, by reviewing some of the existing regulations they had passed before the AI craze started, that would make the policy landscape more robust and more suited to what's happening today.
Okay, Benjamin, we'll look forward to that robust elaboration for policies in the banking sector with regards to artificial intelligence. Thank you so much, Benjamin Dada, fintech analyst, for joining us on the program today. Now, moving on to other stories, we see that Nigeria may need to increase interest rates by at least 700 basis points before the end of the year to curb inflation. And that's according to economists at the Bank of America. Bank of America's Sub-Saharan Africa economist Tatunga Rusike says Nigeria's inflation may quicken to 30% by the end of the year from 22.4% in May after the fuel subsidy removal and the floating of the naira. And this will require a monetary policy response from the central bank and effectively interest rate hikes. Nigeria's inflation rate is already at an 18-year high, and the central bank has raised borrowing costs by 700 basis points since May last year. Now, Botswana and mining company De Beers have reached a new diamond sales agreement. The announcement was made on Friday, highlighting Botswana's increased share of rough stones in their joint venture. The partnership, known as Botswana, involves Anglo-American unit De Beers and the Botswana government. Under the previous arrangement, Botswana sold 75% of its output to De Beers, while the remaining portion was acquired by the state-owned Okavango Diamond Company. The fresh agreement encompasses a decade-long sales deal for the production of rough diamonds by Botswana, extending until 2033, as well as 25-year mining licenses for Botswana. Now, Morocco plans to increase its wheat imports to 7.5 million tons. That's a 1 million ton increase when compared to the 2022-2023 season between the period of May and June. In a report by the Foreign Agricultural Service of the U.S. Department of Agriculture, Morocco will also increase its barley imports to 0.7 million tons, up 0.45 million tons. According to official estimates, this season, Moroccan farmers harvested 2.98 million tons of soft wheat, 1.8 million tons of durum wheat and 1.35 million tons of barley. Although the gross yields of wheat and barley are well above last year's poor harvest, they remain below average due to persistent moisture deficits. And that's a wrap on Business Incorporated. Thank you for watching. I'm Will Ibong. Bye for now.